Oh, hey, didn't see you there. You stumbled in on me. I'm reading one of my favorite books, Tax-Free Wealth. Hey, well, since you're here, would you like to hear about it? Okay. You don't have to ask me twice. Let's talk about taxes today. Welcome to Heresy Financial. Today we're talking about taxes in a way that the mainstream usually does not. Especially if you have any interest in politics, whether it's the left or the right, you're almost sure to hear misinformation on a daily basis about the tax code. You're bound to hear words like loopholes and billionaires don't pay any taxes, and that the bottom half supports the top half. So let's clear up a couple of misconceptions about taxes and the tax code and why you even pay taxes in the first place and what you can do about it personally to minimize your tax liability legally. Let's dive in. There's a common misconception out there that taxes fund the government, and that if people stopped paying taxes, we wouldn't have any roads or public education or military to defend our country. Now, this is one thing that I credit the MMT, the modern monetary theory crowd, for, is kind of pointing out the fallacy in this statement. With $1 trillion deficit last year and on pace for an even bigger deficit this year with our government, it's becoming pretty clear that the government does not rely on taxes to fund itself. They bring in this much money in taxes and they actually spend this much money every year. In fact, we've had an increase in taxes since the Trump tax cuts, and an even larger increase in spending by the government. So our deficits have increased despite tax revenue actually increasing. So the government does not need taxes to spend money. Clearly, we haven't had a surplus. We haven't had enough money come in from taxes to support the spending since Bush. So where does the government get this money to spend? Well, essentially they get it through something called debt monetization. So when the government spends more money than they actually bring in revenue, they have to issue debt. They have to basically take out a loan to cover the difference. Now, historically, these loans were purchased primarily by US citizens and foreign central banks. So you had retirement plans and citizens loaning money to the government through the purchase of something called a treasury. The treasury bond is just literally loaning money to the government for a specific interest rate that you get back. And that's how the government financed that excess spending. Now, in 1913, Congress decided to approve the Federal Reserve and to create our central bank. One of the reasons why it took so long for America to create a central bank in the first place, despite 3 previous attempts to create a central bank, was because the founding fathers didn't want it, because you have a built-in temptation in the system for debt monetization. And that's just basically the central bank printing money in order to purchase the government's debt in order to finance that deficit spending. And so to prevent this, they enacted 2 laws. One of them was debt monetization is illegal. It's illegal for the central bank to purchase debt directly from the Treasury. The Federal Reserve can only purchase treasuries, purchase government debt from the open market. Now, at this point, that's a sham. Right now, there's documentation the Federal Reserve is purchasing treasury debt that has only been on the market for less than a day to a couple of days. And so it's a technical loophole at this point. They're still not buying it directly from. It's not really from the open market. It hasn't been on the market. It's really just they're using primary dealers as the intermediary. It's debt monetization at this point. The second thing that was put in place was the debt ceiling, because they didn't want that capacity to be unlimited for the government to issue as much debt as possible. Within a very short amount of time, that debt ceiling was hit, and every single time it was hit, it was just raised, and it was hit again, and it was raised until it's just obviously it's a sham at this point. There's no real debt ceiling. It just gets raised every single time. So it seems like this is a perfect scenario, right? And, what harm is that causing if the government just spends what it wants, issues debt in order to make up the difference between what it spends and what it taxes, and then the Federal Reserve picks up the slack. Now, recently, the Federal Reserve has had to come in and be that buyer of government debt more than it had historically, because foreign central banks used to be the largest buyers of treasuries, and they're just not buying treasuries anymore. Most foreign central banks are now net sellers of US treasuries. So there's an excess amount of US government debt coming onto the market. Not only did you have the big buyers that used to be the big buyers like China and Russia, they stopped buying US treasuries. They're selling their treasuries now and they're buying gold instead. But you also have the US government creating more debt. And so there's a lot more supply of government debt coming onto the market. And so the Federal Reserve has had to step in and pick up the slack and become a larger buyer. And pretty soon they're probably going to be the only buyer of US debt. So it makes one ask the question, what's the harm in this? Like, why don't we just do this? Like, it doesn't seem like it's causing any issues right now. Well, you kind of have to follow the money trail a little bit to figure out what's going on. The end game is price inflation. Extreme price inflation, probably. The end game and the result of this happening with any country, any time in history, is price inflation. Because what is the government spending money on? They're purchasing goods and services from the economy. And so ultimately, in its most basic form, you have the Federal Reserve printing money, creating money out of thin air that eventually winds its way up into purchasing goods and services from our economy. The basic reality is when you have money created out of thin air to finance the purchasing goods and services, it ends up with price inflation because there's more money in the system than would have been naturally, which bids up the prices of goods and services. And because of a ton of other issues that we're not going to get into at this point, the Federal Reserve and most central banks are kind of backed into a corner. They're between a rock and a hard place, and it doesn't look like they have any choice but to continue doing this because the alternative would be too painful. Politicians would never let that happen. More healthy in the long run, but too painful in the short term. So since this is happening, since the government really actually in reality doesn't need taxes to finance its spending, why do we get taxed at all? Why doesn't the government just do away with taxes and fund all of its spending through debt monetization? And that's a real solution that's been proposed by a lot of people recently because in reality, taxing and creating money out of thin air, monetary inflation, they're the exact same thing. It's the government withdrawing purchasing power out of the economy and redirecting that, using that as it sees fit. That's what taxes are, and that's what monetary inflation is. Again, it's pulling capital out of the economy and redirecting that as it sees fit. That's monetary inflation, that's taxes. So why don't they just do away with taxes and do it all with monetary inflation, with debt monetization? Two big reasons. And really, they're the only two reasons. Number one, taxes are the only way to force people to use your currency. And the US dollar is the world's reserve currency. The US government uses it as a billy club, as a weapon for global domination. But they can only have that power because everybody uses it. And the only way to force, especially your citizens, to use your dollar is to tax them in dollars. And if they withdrew taxing and just financed everything through inflation, well, nobody's going to use the dollar anymore. We're going to use safer forms of money. So that's the first reason. They need to tax it in order to force people to actually use it at least a little bit, just so they have enough to pay their tax liability. And the second reason is that inflation and debt monetization, financing the government spending through monetary expansion, that is a very sneaky way. Most people don't understand what is happening there, what they're doing. Most people don't understand that it's essentially the same thing. So they get away with a much higher tax rate on the economy through monetary expansion than they would if they tried to tax it all. And so it's a way to kind of keep things behind the curtain, keep it hidden, keep it under wraps. Most people, the average American, has no idea what it is, no idea what the Federal Reserve is doing, no idea what debt monetization does. It's the exact same thing. It pulls purchasing power out of the economy just like taxes do, but it's a sneaky way to do it. And so they don't want to completely go one way or another because they want to have the high tax rates through that monetary inflation that they do right now without most people knowing about it. And if they completely stopped taxing, then everybody would realize, hey, if they're not taxing us, how do they have enough money to spend? How do they have enough purchasing power to do what they're doing? Where are they getting all this money from? And the sham would be up, everybody would discover, but would realize confidence in the dollar would be lost, and then there would be a currency crisis. So those are the two reasons why we have this system set up the way we do, why there's both monetary expansion, debt monetization, inflation, and taxes. But the good news is if you know what you're doing and you take the right actions with your life, you can avoid paying taxes. And as Tom Wheelwright likes to point out in his fantastic book on taxes, it is the most patriotic thing that you can do to pay zero in taxes. And here's why. It comes down to who pays taxes and why. The reality is poor people don't pay any taxes. The other reality is true. The rich don't pay any taxes. So who's paying all these taxes? It's the middle class. The middle class pays all the taxes. The middle class supports the entire infrastructure because they are taxed at the highest. Most taxes come from middle class employment taxes. Now, the poor in this country, they don't pay any taxes because of their deductions and their credits and their income. They don't have any tax liability. Now, the rich people don't either because they do things that are talked about in this book, and we'll cover a couple of them. The middle class, they don't do anything to avoid their tax liability, and their life lines up with everything that you need to have the highest tax liability possible, and so they pay the vast majority of that tax load. So why is it the most patriotic thing that you can do to not pay any taxes? Here's the reality. Regardless of what politicians say, the tax code is designed in order to incentivize behavior. And so if you have even the smallest faith in our government, the smallest amount of trust that they're trying to do things to make our country better, then at least a little bit you have to trust that they're trying to incentivize certain behaviors that at least they believe, whether they're wrong or right, that they believe will be better for our country overall. And the way our US government at this point incentivizes or disincentivizes behavior is through the tax code. Let's take a look at a couple examples. Having children. It's better to have a growing population. Countries that have dwindling populations are facing a population implosion and they're facing massive financial crises. So for a country, it's better that you have a growing, within control, within limits, but a growing population. And so there are tax incentives for having children. See how this is starting to work? What else does the government want? The government wants affordable housing. And so there are tax credits and deductions for investors and business owners who provide affordable housing. What else does the government want to incentivize? It wants to incentivize clean energy and oil and gas exploration so that we can be energy independent from the world. So guess what? There are tax incentives for investing and doing business in those areas. What else does the government think is good for our country? It thinks jobs are good for our country. So people who provide jobs, small business owners, the business itself gets tax write-offs. It has incentives, deductions, and credits in order to be doing the things that the government thinks are good for the country. If you want to win the game, you have to know the rules of the game. And if you want to win the game of money, you have to know the rules of the game of money, which are largely taxes. Okay, so a few things that you can do personally to help yourself out with your tax liability. Number one, buy this book. I've got the link in the description below. If you use my link to buy this book, I'll get like 3.5 cents probably. I don't know. But use the link, buy this book, read it. It's fantastic. With one caveat. If you're just a regular employee and that's it, this book's not going to help you that much. Because the government really doesn't want to incentivize people to just kind of be regular employees and do nothing else. You're not actually that much more productive for society than some of the other alternatives. And so there's really no incentives tax-wise for you to be a regular W-2 wage earner employee, and that's it. You can put money into a traditional or a Roth retirement account. Those give you tax advantages. Traditional gives you a deduction now for the money you put in, and a Roth allows that money to grow tax-free, and then you don't have to pay taxes on any of the distributions. And then if you put your money into a regular taxable brokerage account, it can grow and grow and grow, and then you'll only have to pay capital gains or dividend income taxes when you get income from that account. The other thing that you can do, after you've saved up a little bit, you can use some of your money to buy a rental investment property. There are huge tax advantages, like I mentioned earlier, for real estate investing. If you save up, you can buy very cheap houses. If you look out of state, hire a property management company, and you can be a real estate investor with a relatively small amount of money. Now, the final thing that you can do is you can actually start a business. It doesn't have to be your full-time business. This can be a side gig, but then the money that you spend on starting this business, whether you start a website or you're a consultant for something that you've gained some expertise in over the last couple of years in your career, or whatever it is, if you start a business, money that you spend on that is going to be deductible most of the time. And then here's where it gets cool. You start to design your life around that business, and you start to do things for that business that you would want to do anyway. For instance, let's say that you like visiting Colorado. Let's say it's one of your favorite vacation destination places, and so you want to get a tax write-off for that. Well, why don't you buy a rental property in Colorado? That way, every time you travel there are requirements on what you have to do to be able to write it off, the amount of time that you have to spend for the business, looking for the property or meetings, or, you have to spend a certain amount of time, and there's qualifications that you have to learn about. But ultimately, if you like going to Colorado on vacation, turn that into a business. Buy a rental property there. So the bottom line is there are tons of ways to save money on taxes, and as we're coming up in tax season here, coming up on the tax deadline in a couple of months, as you're getting all of your forms together, you can start thinking about this and planning this for the next year, that if you want to start winning at the game of money, it will help you a lot if you have extra money. If your income increased by 10% just because you paid that much less in taxes, how much would that help you? That would help you a lot. And you can start to do that by designing a small business, by designing your investing, by designing your retirement accounts around doing what's best for you for your taxes. So I would highly suggest getting this book, reading it, studying it, talking to a tax advisor, and start doing things other than just being a W-2 wage earner employee, and start doing some of these things that the government wants you to do, and they give you tax incentives to do it. Thank you so much for watching. If you enjoyed the content, help me out, hit that like button, hit that subscribe button, and happy tax season.